Is this my good side?
Yes.
How about if I look at John?
Nope, bad side. Look back.
I can't look at John.
Ah.
No. Welcome everyone to Let's Make an Offer. Did I? Oh, I jumped ahead of you.
No, that's good. That's good. I like the intro.
Yeah,
Yeah.
I did good.
Let's make an offer, or
LMAO.
LMAO, which can mean something else too.
It can. Not in this place. We talk serious here.
We got John Estabrook here from Option Mortgage. John is our lending partner. He does a great job with our clients. He's got a ton of options with Option Mortgage. Let's talk a little bit about that, John, because you and I just got back from a trip last week. We went to Michigan.
Romantical trip.
Beautiful Detroit, Michigan in February.
In Troy and Pontiac. We hit up all the good spots in Michigan.
It was over Valentine's Day.
It was.
Our wife, well, your wife wasn't happy. My wife was thrilled because I was gone. I gave her a gift of leaving for the Valentine's Day holiday. So
My wife was not happy with me.
that's what I said.
Yeah, not happy at all.
Well, I wonder why. Maybe you just got a puppy and
I
like
did.
her.
Got a little 9-month-old black lab, Quinn. Love you, Quinn. Shout out Quinn. My wife wasn't expecting this.
You notice he didn't say, love you, Renee, or love you, boys, or anything like that.
Oh, yeah.
Love you, Quinn. Shout out. Ooh. Gucci.
She's amazing.
No, she's a really cute dog.
Yeah.
Well-mannered and everything. So
My wife is great too. My kids are wonderful.
okay, well,
Okay. Gotta get
nice
that in there.
recovery. Nice recovery.
Thank you.
But let's talk about why we went to Michigan in February for Valentine's Day.
Well, United Wholesale Mortgage is the #1 lender in America, and they invite loan officers and realtor partners out there, sometimes twice a year. So, you were my first experience out there in Michigan, first realtor I brought out there, and I think we had a great time. And it's about how they operate and how to grow our business together.
Okay, let's take a step back.
Okay.
So United Wholesale Mortgage, most people, I would say 99% of people have never heard of them.
Right.
So
They don't advertise.
what are they? I mean, you have Option Mortgage.
Yep.
There's banks all over town that loan money. There's mortgage brokers out there that loan money. So what is UWM and what is a mortgage wholesaler?
So they are a broker and a correspondent lender, which I am both. A lot of people are just brokers or they're correspondent lenders. I can do both. So on the broker side, it opens up their awesome programs like our 1% down. You don't even have to be a first-time home buyer, but you can buy a loan as long as you fit within this bubble for income limits. Buy a house with 1% down and you get up to a $4,000 credit towards your down payment.
So United Wholesale Mortgage buys mortgage-backed securities, or they pool them together, or how's that?
They pull them together, and they're on the market. They're publicly traded. They close 1,900 loans a day on average. 1,900 loans a day. Wild.
Yeah, that's amazing. When we went up there, I had no idea how big they were. I knew they were big, but they've got over 7,000 employees.
Yep.
Like 3 million square feet of office space.
Yeah, it's an old, was it a Chevrolet dealership? Or not dealership,
Plant.
Factory, yeah.
Which was really cool to see. And I mean, talk about, a campus.
Mm-hmm.
You hear about like Google and places like that where they have a campus. I mean, they have everything there. I mean, you could go there and work all day. And
They have restaurants?
Restaurants, you can go shopping. I mean, you can.
They have a tailor in there.
Yeah.
For the account executives, they can get their suit fitted and pick it up the next day.
And in addition to that, like when we were there on Valentine's Day, they had a shop set up where you could go in and buy your chocolates or Valentine's Day cards or flowers or whatever gifts you wanted. They had it all set up and everything, and it's kind of a cool system. And they have shuttles running between buildings and everything to move their people around. But quite an operation, and it was cool to see. And then they've got classrooms all over.
It's always, the big thing is learning something new. Whenever we go out there, I learn something new. I've been out there, this is my 4th trip out there. Normally I'm by myself, but it was a little bit different experience with you because they went in a little bit more depth of like how they operate with real estate agents and the overall process on the back end of things.
Yeah, it was really great to see and know that you're backed by such a huge company.
Yeah.
But when people work with John, they get John, and you don't, push them off onto a processor or something like that.
Right.
You handle everything, similar to what we do
Right.
with the Metro Pros. We handle everything ourselves, even though we've got this great team and marketing people and everything else. The communication is with us individually, and I think that's important.
It really is. And just to touch on that, I do have help if I need it. If I have a question about either one of their loan products, or maybe sending out a closing disclosure and getting the fees correct to disclose correctly, I can call them and they answer the phone. First or second ring, they answer, and hey John, how can we help you today? I love it.
Well, and even after the trip, your account rep up there at UWM followed up with us on some things. We responded. I mean, he was quick to get back to us.
Yes.
Quick to provide information and everything. So that's been great to see as well.
Mm-hmm.
Do all banks or loan officers or brokers, do they all have a UWM or?
No, not at all.
Okay.
So you have to be set up with them, and they have to make sure you fit their mold of what they're looking for in a loan officer. And then they won't be set up with a bank. That wouldn't make sense for them. And their big thing is, if I send them a customer, that customer they want to refer that customer back to me if the customer ever calls in for a question or a refinance. They don't have any loan officers in their building at all. So it's all 100% independent brokers and correspondent lenders, which is different from every other place that I work with.
I was going to say, what are the advantages of working with the UWM?
Speed. They're quick. Their rates are super competitive. Their loan options are almost endless. They have a DSCR product, a huge jumbo product, which jumbo loans are anything over, let's call it $765,000. They are beating big banks around town, which is wild. At my old location, my old company that I worked for, I couldn't even come close to touching that. And they have a bank statement program. I had someone that applied for a loan, got their tax returns. They own a business in Omaha, and their gross for the year, or net, that I could actually qualify them with was $782 for the whole entire year. But if I did a 12-month bank statement program, their deposits were over $100,000 per month. So that, I couldn't have done that at my old place, and now just the doors are wide open.
And that's different. The bank statement programs are different now compared to back in the early 2000s.
Right.
Where it was just stated income, and they never checked anything, and they
Right.
never, ran credit checks or anything.
And I know that customers' income reporting, they've been in business for 3 years now, and we didn't have 2023 tax returns yet because the year hadn't completed. So we know the income is there and they're continually growing, but it's just a great way to get business owners into a mortgage.
Well, again, we're talking with John Estabrook from Option Mortgage, and the reason we're talking about UWM is, one, we took a trip there this last week.
Yep.
But two, wanted to talk about how easy it is to work with John, how competitive he is. He doesn't have a bunch of fees and charges that he charges. No. His rates are very competitive. You get that one-on-one relationship and communication, which I think is really key. And it's just a great experience. And I would highly recommend, giving John a call. Even if you want a second opinion, John will give you a second opinion. If you're getting a better deal, he's going to tell you. And I think that's the best thing, because he's an honest guy who's hardworking and will tell you the truth and not try to convince you to switch to benefit him.
Right. And I'll do the second opinion we'll just have a conversation. I'm not going to ask you to fill out an application. I'll give you, hey, with your credit score, your down payment, your purchase price, the loan program you're looking at, I think you're in a good place with that lender you're at, or maybe I can save you a whole bunch of money.
Or maybe there's a program out there they haven't even talked about.
That too.
Because there's a lot of those out there that a lot of lenders or loan officers just kind of focus on like one or two loan products, and they don't explore every option.
Right.
So those are great things. And again, give John a call or stop by optionmortgage.com and you can fill out an application. the other question is, John, when somebody gets a second opinion, the common belief is that, okay, I'm going to get a second opinion. Now you're going to pull up my credit score. It's going to hurt my credit because now it's another credit inquiry.
Right.
Is that true?
Well, yes and no. So originally, if you come to me and you're looking to get a pre-approved, I'm going to do a soft check to make sure you're going to fit within this scenario or be approved for this mortgage. That has no effect on your credit score at all. And then once you once I approve you for a loan, I'm going to do a hard credit pull, which does impact your credit score up to 5 points. And my approval letter is good for 120 days. After that, we would have to do another hard inquiry.
What are rates doing, John?
Oh, well, it's been a fun couple of weeks. First, we had the jobs report where we were expecting, a little decline in the number of new jobs created or people losing their position. And here they come in, doubling expectations. The economy's super strong, and so the bond market just...
Yeah, so you think having more jobs is a good thing, but it adds to inflation.
Yep.
And so that drives the bond prices down, and then rates go up.
Yep. And then CPI, they were expecting 2.9 and it came in at 3.1. That was another day where rates just climbed up. So what is today? February 21st, 2024. We're seeing rates around 7% on a conventional loan.
Yeah. And they'd gotten just under 6.5.
Oh yeah.
For a while, and that was nice to see. And what is the prediction? What are people saying as far as expectations for rates?
Originally, the predictions for the Fed cuts were going to be 6 times this year. Now the predictions are down to 4, and if things continue like that, it has been maybe 3 cuts.
Yeah.
Maybe.
Well, I mean,
have you seen anything get cheaper?
No, but it's not going to get cheaper.
Yeah.
I think that's a misperception. I mean, people think that as the Fed drops rates and inflation gets under control, things are going to become cheaper. Well, no, they're not. They're just not going to increase as much as they have. So, I mean, if they were $1 5 years ago and now they're $1.50, they're not going back to $1. They're going to stay at $1.50 if inflation gets under control.
Yeah.
Mm-hmm.
Or you'll see next year it'll be $1.55 or whatever.
So correlate that to home prices and what if rates do come down, what's going to happen?
Well, if rates come down, prices are going to go up dramatically, and demand's going to go up even higher. Right now, there's a very large number of people that are sitting on the sidelines waiting for rates to drop, and there's a housing shortage nationally. Doesn't matter where you are, there's a housing shortage. And then you have the largest group of millennials yet to enter the market.
Mm-hmm.
And that is coming up in the next 3 to 5 years. Well, that group of millennials is bigger than the baby boomers for the same time period. So this will be the largest influx of home buyers coming in the market in the U.S. ever.
And seniors are staying in their home longer than they ever have, so it's not opening up those used homes. Is that the right word? Those used homes are just sitting there occupied, of course, by seniors. That's great, but they aren't moving out as early as they have been in the past.
Yeah, and in our next podcast, I'm going to get into that and the housing and why we have such a shortage and everything, and kind of explore that with you and get your thoughts on it, because it's a unique situation. A lot of people think that, the market's going to crash like it did back in 2008. That was a totally different situation, where we had a surplus of homes for sale. We had a surplus of new construction homes. We didn't have enough buyers. There are bad loans all over the place. None of those things are going on, and actually the opposite's going on. So we're going to dig into that in the next podcast and talk a little bit more about it. But for financing and getting a mortgage or looking at refinancing, people that bought a home last year at 7.5%, 8%, which there's plenty of those. Mm-hmm. You can call John and talk about refinancing.
Yeah,
it's a good time.
Yep.
You're not going to refinance if the rate's 0.25% lower, 0.5% lower, but if it starts to get bigger than that, you want to consider it.
My rule of thumb is 1%.
Yeah.
1% lower rate. It's time to refinance.
Which I think it's going to happen this year, as long as inflation gets under control, which it looked like it was getting under control. So hopefully if they leave rates alone for a little bit, that will help tame inflation, which will help mortgage rates, and we'll be able to get back on track. And I think if rates were about 6%, that'd be fantastic.
Yeah, I love that.
I think you dip into the 5s and it becomes this feeding frenzy, and it's really a bad situation for first-time buyers. Or
Well,
even buyer.
I am doing loans at 5% with the 2-1 buy down, temporary rate buy down.
We do have temporary rate buy down, so let's visit about that just real quick before the podcast is over. So what is a buy down, John?
So let's say I lock you in at 7%. Maybe you get it costs $8,000 for a 2-1 buy down. That means your first year's interest rate would be 5%. Your second year's interest rate would be 6%. And year 3 and beyond would be at the rate you were locked in at 7%. What I like about this is if you refinance within that 2-year time frame, anything that's left over in that temporary buy down account will get applied to your refinance loan.
Which is great because rates are expected to drop, so then they can refinance, use some of that money.
Yep.
But in the meantime, they're saving significantly. And a lot of people go, well, gosh, I don't have $8,000 for a rate buy down.
Mm-hmm.
But they're asking for $8,000 off the price of the home that they're buying. Don't ask for money off the price of the home. Ask for some closing cost assistance and rate buy down assistance.
Yep.
And that's going to save you way more money in the long run because your mortgage rate's 2% difference on an average mortgage.
You're smarter to buy now when the houses there isn't a huge frenzy when rates actually dip. All those people that are on the sidelines right now come out of the woodworks and you're fighting for the house. You buy it now, refinance later.
Well, I tell you what, the trip to Detroit was great. We looked for some entertainment. May have gone to a casino.
Yes.
I may have suggested one in Windsor, which I didn't realize was in Canada. I didn't know Canada was so close to Detroit. It's like take a bridge and there you're in Canada. So
We were on our way there until I said, Windsor's in Canada.
Well,
we get to the border, oh boy. No passports, no nothing.
No, we weren't prepared for that.
No.
And I think the other thing is when you're looking for entertainment is make sure you look at Google reviews.
Right.
Yeah, you don't want to bad Google reviews on anything. So
No.
make sure you check those out.
There were a few.
Yeah, there was a few that were questionable at best.
Yep.
But anyway, thank you for listening and watching our podcast. Let's make an offer. Stop by optionmortgage.com and check out John's site. He can help you with any mortgage questions. Even if you're not ready to purchase, I'd give him a call, talk to him, figure out what the options are. Prepare yourself so when you're ready, everything makes sense and you're prepared. Or stop by themetropros.com and check out our website and we can help you as well. Talk to y'all soon.